as our good friend James Earl has made sure to explain to us. So, quick bit of housekeeping for those who maybe don't know. Of course, I am Jonathan Van Kloot, JVC to my friends in the pit, and I am the community manager here, and just kind of try to keep the ship running smoothly and helping out with any member issues. If you've got any problems at all accessing any of our content, any of our information, any of our classes, anything with your membership, anything like that, come to me for that stuff. I will gladly do whatever I can to help you out and make sure that you have a good experience and keep things smooth sailing. So beyond that, housekeeping for the Zoom sessions. Of course, if most of you are probably familiar with Zoom these days, it seems like for the last few years, everything has been on Zoom. So I'm guessing most of you are pretty familiar with how the basics of Zoom work. One thing will be when these meetings first open, when the room first opens, it's quite possible that you will not be muted by default. So just be aware of that, especially if you're having private conversations on your end or something like that. And you don't especially want to be broadcasting them to everybody who's in the room. Just make sure when the room first opens, check your mic and status and make sure you're muted. I will generally try to stay on top of that kind of thing as well and mute everybody. But it's possible that somebody slips through the cracks. So check that. Same with webcams. We don't use webcams for our meetings, but it's possible sometimes people have their webcam turned on or they accidentally bump it and turn it on or something like that. Again, I try to stay on top of that, but things can get missed, and webcam turning on in an inopportune moment can be less than desirable, let's just say. So make sure your webcam is also turned off since we will not be using them for these meetings. Let's see, a couple other things. When the sessions are wrapping up and we're getting close to the end, sometimes there's been chat in the text chat that people want to hang on to. Somebody might have shared an interesting tidbit or suggestion, or Jeff might have posted a link to something or whatever. So if you want to save the chat, I suggest you do it before the meeting ends, because once the meeting is over, the chat is gone. So just a reminder now. I'll try to remember also at the end of each meeting to say, if you want the chat, save it now. But just putting that out there now, you can save the chat yourself prior to the end of the meeting. You just got to go to the chat window or the chat I guess it's a window. Anyway,
yeah, I'm gonna drag it over and show you. You go here.
You can't. We can't see it.
You can't see this? Oh.
No, Zoom doesn't broadcast those windows. But you just go down to the bottom of the window right below where you would be typing on your message. Oh, on a phone. That's a good point, Ghana. I don't know where it is on the phone. On the phone, I'm guessing you can't save the chat. But for people who are on a laptop, desktop, something like that, Windows, Mac, whatever, right below where you would typing messages in the chat, you can just click the little three dots, the ellipsis or more menu, and then under there is save chat. So yeah, Donna, on a phone, taking pictures is also a perfectly reasonable way to do it. Of course, a picture you can't. It's not a clickable link and things like that. But yeah, it will definitely do the job if necessary. And on a phone, that might be the only realistic option. So. Let's see. Another thing is in the library, and this goes for all of our library content, not just the Scalpathon stuff, but in general. The platform we use to host videos, Vimeo, is really nice in that it does automatic subtitling. It takes a little while after the video is posted, but they scan through the video and convert it to text, and they do automatic subtitles. You have to turn them on. They're not enabled by default, but if you want subtitles on things, I know we've got people from all around the world. So just for, English purposes, language purposes, and also just sometimes, you want to be able to read what's being said or what have you. You can turn those on with the little CC closed captioning button right at the bottom of the player. So just something to note that the subtitles are there, and sometimes that's very handy.
Jonathan, can I make a quick comment about that while you're just going? I'm Jeff, by the way. You'll hear more about me in a minute. But just on the subtitling thing, also, I want to just tell everybody up front, we have half of this group are from outside the United States and may not be native English speakers. Please don't hesitate in the chat to ask me to clarify or to repeat. I tend to talk quickly, and I may use some slang, and I apologize in advance if I am not clear. Call me on it. I've been an instructor a long time. I'm good at adapting. You can't insult me. Back to you, JVC.
Perfect. Yes, indeed. All right. Let's see. Third point. There are going to be some sessions that you Scalpathon folks are going to be invited to that are normally regular TRG sessions, but they're going to be good opportunities for Jeff to demonstrate stuff that you guys should see as well. For those sessions, Normally our members book those through our calendar system. So there isn't a link ahead of time that I can just give you all in advanced preparation of that. But what I can do, as soon as the room is open on those days, I'm talking about our regularly scheduled stuff, the Sunday reopen and, some of the other meetings throughout the week. As soon as the room is open, I can grab a direct link from within the room, and then I will be posting that in the Scalpathon stream for you guys. So you won't have to register or book or anything like that. Actually, I think Zoom wants you to do the usual Zoom registration, but you won't have to book on our calendar or any of that. You'll just be able to click the link, give Zoom your name and email, and poof, you're in. But I won't be able to do that until after the room is open. So there won't be a lot of advance notice on those as far as access to the link. So just make sure you are aware on the schedule, which is posted again in the Scalpathon stream, of when those sessions are happening, and watch for a link to get posted in the Scalpathon stream. And then you will be able to join us for those sessions. So that is the main points I wanted to make. I'll probably think of other stuff along the way, but basically that is the welcome. And it looks like most of you have managed to find your way here, which is excellent. So appreciate that. Again, reach out to me if there's ever anything you need any assistance with or anything like that. And with that, I think I'll just hand it over to your host with the most, Mr. Jeff Mayhem. Jeff, take it away.
Hey, good morning, good afternoon, good evening, depending on where you are. My name is Jeff Mayhem. I am, along with Lee Harris, who is also here kind of in the background, co-founder of TRG. We started, I'll tell you my story in just a second, but we started TRG in 2019 with a 3-month long workshop, and it's kind of just developed since then into a really neat little community for people that trade the markets we trade. So we'll talk more about that in just a second. Let me just give you 2 seconds on my background. And also let me say at the very beginning, I am totally informal as an instructor. So please give me feedback and talk to me in the chat along the way. I keep a pretty good eye on it. The reason I say that is if you've ever done virtual instruction and you've also done instruction face-to-face, there's a big piece missing. I can't see you guys. I can't see reactions. I can't see if stuff's landing, if you're understanding. So please don't hesitate. And if I'm talking too fast, ask me to slow it down. I'll try. I have a lot of energy. If there's something you're not clear on, I'll make every effort to make it clear. Ask me. Please put questions in context, however. By that, I mean, don't just say, does that happen on Thursdays? Say, with respect to the point you made about the SPX, does that happen? Give me the context of your question, because we're going to be covering a lot of material. And, by the time I see your question, I may not know exactly what you're asking, what it's related to. Okay, so moving backwards. As I said, my name is Jeff Mayhem. I have been trading all the markets of different kinds, and I'll elaborate in a second, since I'm about to date myself. Since 1973, I started trading in 1973 on my birthday. I was 13 years old. I got some money for my birthday, and I had my father take me down to his stockbroker's office. I opened an account, and I promptly bought some stock options that I had been planning this whole thing for about a year before my birthday. The market had just always been a passionate interest of mine. I started out trading options on takeover candidates. That was my 13-year-old strategy. I got lucky. It worked very well for my teenage years. I migrated from that into trading. I continued to do that. I started trading options like the way we trade futures now. Futures weren't accessible unless you were on the floor in the pit. There were no retail way to do that. Calling them in was really complicated. So I traded OEX options as kind of a proxy for what the futures market did. And I did that for a long time. Most of the 1980s also did the options on buyout candidates. I thought I was a genius. I had taken my little $1,500 account up well into 6 figures, and I was a student at UCLA studying business economics and Asian philosophy. And I proceeded to have, in one day, a loser of well into 6 figures, almost $175,000, which was most of my account, not all of it, but one trade, one day, one mistake. I blew 12 years of progress. And that's something really important to keep in mind as we go forward. It's real easy to do that. If you ask any seasoned trader, that's something that if they haven't done it, they know people that have, or they came really close to doing it. So we'll talk about that. Scalping is a very specific risk management world, and you should never be in a position to have that happen. But a lot of us have to learn the hard way. So anyway, that was in the early 80s when that happened. I used to carry around, those of you that are old enough to remember, they used to have stock quotes that you could get on a radio receiver that was like the size of a big calculator. It was called a Quotrek. And I was in other businesses. I worked for IBM and became a venture capitalist in technology. Along the way, I was trading pretty much full time. So anyway, fast forward, I started trading futures aggressively in the late 90s. I had another educational group on the internet that was called Dr. Jeff's Day Trade Clinic with a couple of hundred people between 1999 and 2003. And at that point, I was writing code for eSignal, if you remember the platform, and I started developing a volume-based scalping methodology, which is what we're going to talk about throughout the next 2 weeks, which pretty much I've been improving, and I don't want to use the word perfecting because there's no such thing. I've been improving and making steady progress with a system that has a really good edge and works really well. Takes a lot of practice, and that's kind of how I got to where I'm at. And along the way, we formed TRG. My co-founder, Lee Harris, was a student in that first workshop. He has a fairly extensive trading background and business background as well. And JVC came along right after that in one of our little 1 week workshops like this, a chart to dome workshop, where we were talking about how to go from horizontal charts to trading vertically on the dome. And we all hit it off, so JVC became our community manager in addition to being a student. So that's kind of how we got from the beginning to here, and that's a brief introduction on me. You'll hear more along the way. About half the group are TRG members, and about half of you aren't. So for the TRG members, yeah, they've heard a lot of this before. There'll be some repetition, which is always good. But I will try to share stories about the trading world along the way. I've been an active participant in trading since I was 13, and in the 80s and 90s, I used to go to the floor at the CME. I wasn't a floor trader, but I had friends that were, and I used to hang out there and watch and learn. And so I have a lot of experience with that. I know a lot of big name traders as acquaintances, some are friends. And so anyway, I've been around a long time. I like to say when I'm joking, but I'm not, I've probably forgotten more about trading than most people know. And that's okay. I'm 63 years old as of a couple of months ago. And, I read the old technical analysis books. I can quote Murphy to you upside down. And guess what? None of that is useful now. It was a great ride through the 90s and the early 2000s with technical analysis, but it's all about order flow and traded volume now. And that's what we're going to talk about. Anyway, the purpose of today's session, other than that brief introduction, is to get all of the housekeeping stuff out of the way. I have to warn you in advance, there is an overwhelming, and I'm not using that word lightly, there's an overwhelming amount of information that I'm going to present to you. There's no way to slow it down because it's the nature of the information. You will feel like I'm taking a fire hose and inserting it in your mouth and turning it on. That's what it's going to feel like. So there's going to be a lot of suggestions along the way about dealing with that. Just try to absorb, watch the recordings over and over again if you have time. Your best focus on this entire set of meetings is to focus on what I'm teaching and what I'm doing on my screen. So it's really important that you understand, number one, what's on my screen, and number two, that you're not off trying to do your own stuff on your screen to follow along, because that never works. It's really important you understand we've had almost 600 members, I think, in and out of TRG, and a couple of thousand in our free sessions and communities, and we know what works and we know what doesn't for teaching. The other thing I didn't mention about my background that I should is while I was doing that trading, I worked for IBM as a salesman and as a trainer and a sales manager. I was involved with, at this point, 26 different startups. And I've always been a coach and a trainer and a mentor. That's always been my role, whether it's as a sales manager or as a board member of a startup. So understand all that and come along for the ride. And so it's essential today that we get the housekeeping done. So let's go to, hang on, let me get my, Zoom is interfering. There we go. Okay, so this is what we're going to do today. And if we need more time, we will spend more time. I really want to be clear that today is about getting everybody on the same page and showing you how it's going to work so that when we start our live sessions, the first one's tomorrow, we don't have problems with that. So what to expect? Okay, first of all, let me get out of full screen mode here real quick. And I'm going to refer to things in the pit. And if you're not in our pit community, you're going to miss a lot of things. So I'm going to kind of show you as I explain them where they are. So over here on the left, I'm in the pit right now. And you can expand the links if you can't see them all, more topics. One of them is the class schedule, which is right here. So now we're going to talk to this for just a minute. All right.
Real quick, Jeff, I want to interject one thing. I forgot to mention this up front. In Zoom, because this always comes up, Zoom.
Oh, yes, zooming. Yes, please.
Yes, exactly. It's entirely possible, and in fact, even very likely, especially if you're looking at this on like a phone or a tablet or something like that, that Jeff's screen is just impossibly small, and especially once he's got a trading platform up, you won't be able to make out detail, et cetera, et cetera. There's nothing we can do on our end to change any of that. We also cannot make his cursor bigger, and I know how completely stupid and insane that sounds. We know, but no matter what we do, Zoom will always readjust his cursor size to make it small. So it cannot be made bigger. But what you can do on your side, and I'm speaking as a user on a desktop computer, I'm sure this is a little different on a mobile device, but the principle is going to be there somewhere. On a desktop computer, at the top of Jeff's screen share, there's a green thing that, in my case, it says, "You are viewing Jeff Mam's screen." And to the right of that, there's a little drop down that says "View Options." And under that, there is something that says Zoom Ratio, and by default, it's on Fit to Window, which just scales his screen to fit on whatever the size of your screen is, which if you've got a giant screen is probably perfectly fine. If you don't, though, his screen is going to seem really tiny. You have to change that. You can change the Zoom ratio to be 100% original size, and what that will do is show you literally Jeff's exact pixel resolution ratio representation exactly as he sees it. The problem, though, is now you kind of have like a little tiny porthole into his screen, and everything will be nice and big and readable. But as he moves his mouse around, your screen's probably going to be flying all over the place trying to keep up. So depending on the size of your screen, you're going to want to experiment with those different settings. Try 50%, try 100%, try Fit to Window, see what works best for you. You can also manually, instead of having it automatically follow his cursor, you can manually grab the screen and drag it around to see what you want. Just be aware that it will no longer be following his cursor. So if he goes off and saying, yeah, and if you look over here and he's pointing to something and your screen isn't showing where he is, you may not know what he's talking about. So it's a reality of Zoom. Unfortunately, it's how it is with regards to resolution. There's nothing that we can do. This is all controllable on your side. So yeah,
I did turn on the spotlight, which is a little bit of help.
Yes, spotlight helps a little bit. There's one other thing I was going to say. There is a bug. This is a long-standing Zoom bug. It's totally inconsistent and random, and we've never seen any pattern to it. But sometimes the presenter's cursor does not appear. Other times it does. Like, in fact, right now, for me, there is no option to follow presenter's cursor. There should be, but it's just not showing up for me today. Other times it will show up just fine. It's completely freaking random. So for what it's worth, if you don't see that option, I'm sorry, yell at Zoom. I have, but it's just how it is. So there you have it.
We're getting there, Kyle. We're getting there. We got to do this first or else people get lost along the way. We've had a lot of experience with this. Trust me. All right. So back to schedule, what to expect. Here's the copy of the schedule. Keep in mind that, we'll open the room right beforehand most days so we can get everyone organized. In addition to these times, and, these are all listed in Eastern Daylight Time in the United States, translate accordingly to your time zone. There will be occasional ad hoc sessions. Because the nature of Scalpathon is going to be 24/7 for the next 2 weeks, with the exception of Saturdays when we'll still interact, but obviously the markets will not be trading. Because of that, sometimes I won't have something scheduled, but I'll see something interesting and I will decide to start trading it. And what I will do is put a link in the Zoom. And again, everything will be in the Scalpathon stream. Scalpathon alerts, you'll see an alert there that an ad hoc session is going. And you just click on the link with the alert and you will be able to join that session. So we may have a lot more than what is on the schedule, but I want you to be familiar with the schedule. Also understand this, again, a lot of the students in this session are TRG members, but some aren't. Many of these sessions will be joint with TRG. So just be aware that that's going on. And so, for example, our Ides of Mondays, which is a public session that we do, there'll be other topics going on, and it won't be specific to Scalpathon, but you guys are invited to those things, and they will be really helpful for you to understand Scalpathon events. Okay. The other thing I want to be really clear about is what we're going to do in each session. So I'm going to go through this really quickly, Kyle, and everybody else, because this will set expectations properly. Today, what we're going to do is get ourselves organized. That's the introduction. As soon as we get through that, which is this one slide, that's all I've got, I'm going to open up my platforms and we're going to go through what you see in front of you and how I use it. And it's going to be really important that you understand that, because that's key to understanding how to trade this way. We're going to talk very briefly about a couple of setups doing that, but because there's no live data, that's really hard to do. So this is mostly introduction to the theory and setups part. We're going to mostly focus on the tools. And then next Saturday, theory and tools part 2, risk management. When we get to this session, we're really going to go into the nuts and bolts, because by then everybody will have seen a week's worth of examples of what I'm doing and how I'm using it. So again, it's going to be very light through that material today. So that's what I'm doing here with what to expect. The syllabus. All the classes are listed here. As I said, there will be additional events that are not on this calendar that you're welcome to attend, like Ides of Monday, or any ad hoc sessions, which I'll announce. Just watch the pit. That's where all the conversation goes. Prerequisites. This is a really good one. It's a really simple one. There's no prerequisites to this class, but if you want to get the most out of it, I would do 3 things. I would have read, or I would quickly read, the book by Annie Duke called Thinking in Bets. It's an excellent book. I posted it in the pit, again, where everything will be. And it's a really quick read, but you'll understand the psychology of what we're doing a lot better if you take a look at that book. Another thing, there is a link in the pit also to some videos that I suggest you take a look at. So here's recommended reading. There's the book. And where are the, help me out here, JVC. Where's the stream that has the library links?
Yeah, you put it in Scalpathon 2023 videos. Here it is.
There it is. Yeah, right there. Okay, perfect. Right, yeah. So yeah, if you go in there, there's 3 videos: risk management 1, 2, and 3. And a lot of what I'm talking about in there is going to be over your head if you haven't been around TRG. It just won't make sense. But please watch those as soon as you can. I'm going to cover that material over the course of the 2 weeks. But those 2 things will be really good material. Oh, there's the, thank you, JVC. There's the links. Mm-hmm. Those will be really good material for you to just understand some of the language and some of the ideas around what I'm doing. Let me put this back. Wait a minute. Schedule back up.
Those went to the waiting room and not to the public.
Oh, they did. Okay.
So, posting them. No problem.
Yes. Okay. That's cool. There we go. Thank you. So there's one other prerequisite. So the 2 things: the book and those 3 videos. When you have time, if you have already seen them, years ago or whatever, watch them again if you're a TRG member. The book is a great book. You can read it in an hour or 2. It's a quick read. Just, get the idea of what's resulting, for example. That's an important idea that's discussed in the book. I'll talk about it. Okay, there's one more prerequisite. It requires membership. Yeah, can you handle that, JVC? There's a little chat that's like you. Okay. Yep. See, this is why we're doing this, guys, so everybody can understand how to get to the videos and how to get, people in TRG have been using Zulip, which is our pit, and our video library, which is a web page with, some WordPress stuff on it, and it takes a little time to understand how it works. Once you do, it's really simple. So we please, if you have trouble or questions, by all means reach out to JVC. That's exactly why we're doing this. So last prerequisite is a really simple one. I need you to be tabula rasa. Tabula rasa means blank slate. If you come to this class with preconceived notions about how things work, you've already failed. I promise you, you've already failed. I've been trading a long, long time. I understand every type of technical analysis setup that you may or may not be using, and it may or may not have worked for you. What we're going to do in this next 2 weeks is completely independent. You do not need to know anything else to do it. And not only that, but mixing it with anything else makes it worse, at least until you really understand it well. And you'll hear a lot of reinforcement of what I just said from TRG people who've been working on this and working with me over the last few years. So just please try to be as blank slate, as open-minded, as no preconceived notions as you possibly can, because some of the concepts aren't going to make sense to you if you're trying to put them into conventional wisdom from the market. Like the trend is your friend, conventional wisdom. In futures, the trend is meaningless and there are rarely any sort of trends. So again, those kinds of things are just completely wrong. So you have to learn to disregard them. And I will bring this up over and over again, but I really need you to work hard on this one, because invariably there's one or two people that are constantly going to challenge my assumptions. And I want you to challenge the material because that makes me a better instructor, but you can't challenge the assumptions. We either have to agree on the assumptions or you're not going to get anything out of this. Trust me, it works. I'm going to show you lots of examples of me doing this. If you're new to TRG and you haven't been around the pit, I suggest you go take a look at the following stream. And again, I'm not blowing my own horn here. I'm just trying to make a point. In the Anything Goes stream, that never does works well. In the Anything Goes stream, there's a topic called Scalping Micros This AM. I have been posting my trades here almost every day for a long, long time. So if you have any question about this methodology being effective for scalping, all you have to do is go look at this stream. There are literally thousands of examples. It's not like I got lucky one day and I did this. You can scroll back years and there's countless examples and they're all similar, okay? So I really, again, need you to understand that what we're doing works if you let it think in what it is and how it works. And if you understand the second piece, which is it takes a lot of practice to get good at this. Like anything worth doing, it will take a lot of practice. You're not going to be able to watch me for 2 weeks and get rich 2 weeks later. There's a couple of students in the course that I mentor one-on-one, and if you're interested in that, I'll talk about that at the end of this course. But some of them have been in TRG and been active participants in the market for several years. And it's sometimes, you make a little bit of progress, then you just take a couple of steps back. If you've ever traded, you know what this is like. And every now and then you have just a massive level up where you just make significant improvements. And that's what this will be like. It's not going to come to you all at once. There's going to be levels, and just getting in the door and understanding what we're talking about is going to be level number one. And then, seeing it in action and understanding why it's working. Again, I can prove to you that it works. That doesn't matter. It's understanding how we're doing it and what you need to do to practice that skill. So this is really important. That's the third thing. And I really, really want you to focus on that prerequisite. Please have a blank slate, a tabula rasa. Okay, please, no preconceived notions. Number 2 point here, this is educational, not representative. I want to be really, really clear. I have been trading my own money for 50 years. I'm not here to prove to you that I'm credible. I've been doing it in public for 20 years. So I don't need to prove anything to anybody. So, every now and then someone says, well, can you show us your bank statements? No, I'm not going to, and I don't need to. I am teaching you a technique here, a technique that works really well. So it's an educational environment. This isn't about how much money can I make in front of you. This is not about if I'm making or losing money, but I like to challenge myself. So here's how this is going to work as far as the P&L and my trades. The last Scalpathon, we did this and it worked out really well. I will be trading in one account most of the time. It's an Apex evaluation that I set up. It's one of the 150,000, quote unquote. It's $5,000 drawdown, $9,000 profit target. I will post every trade I do in the Scalpathon in the stream with those trades. My objective, which we may or may not be able to do, but this is what we did the last Scalpathon. We did a 25K or a $1,500 drawdown, $1,500 target, and we got the account funded. We had no losing trades over the course of a week. Scalpathon was a week last time, and I posted every one of them. So what I'm doing is I'm trying to show you that if you apply a technique, you can achieve your goals, getting funded, trading your own money, whatever those are. But this isn't a trading room, watch Jeff trade. This is an educational environment. My role is teacher, mentor, instructor. It's not to impress you. I don't need to worry about that, and I'm not here to do that. Now, we may have some ridiculously good trades. If that happens, it's because I'm following the process, I'm executing the technique, and I got lucky because those are the pieces to getting really big winners. Most of scalping is just consistent winners over time. They're generally not very big, and then there's as few losers as possible. I have almost no losers with this technique, so you'll see that, and you'll see how it works. Some of this sounds like bullshit. How can you have a 100% win rate? If that's where your head is at, then you're not being tabula rasa. I promise you'll see all that, and I'll explain it, and it will make more sense. But it's really important to try to get rid of the preconceived notions, because this is a really kind of different approach to doing it. It's simple. It's really simple, but you have to get rid of all the conventional wisdom because it will distract you. Okay. Perfect, Wally. That's exactly what I need you to do. Okay. So the format of the sessions will be very, very informal. I'm an informal guy. Feel free to reach out to challenge me in the chat. If you step over the line, I'll let you know. But don't tell me, well, my MACD works. Don't give me that kind of stuff. You're here to learn from me. I'm not here to learn from you. Okay. Other than that, it's pretty free form. The rules of engagement are really clear. Let's all learn. And if I'm not getting through to you, call me out and tell me what I need to be more clear on, okay? As I said, the P&L stuff I already covered. I will show you what I'm doing. Hopefully we'll make some money. We'll try to get this 150K eval done. I have funded accounts at Apex. I have funded accounts at Lilu. Sometimes I'll be trading those. I have cash accounts also in multiple brokers. Sometimes I'll be trading those. But every trade I do live in front of you, I will at least put in that Apex account, and I will record it and post its results. You may also see some other ones. I do use a trade copier, and I copy to my cash accounts and back and forth sometimes. Again, these are all things you will see live. I will explain them. When do you use a trade copier? When don't you? When is it a good idea? When is it an absolutely horrible idea? I've made all those mistakes. I've been through all of that. It's a really cool space. You can buy drawdown really cheap. The eval we're doing with 150K, which is nonsense. It's not 150K. It's $5,000 of drawdown. Let's call it that. I'm buying $5,000 of drawdown, and I'm doing that with with it's $60. I think the first month is $30. We're going to do it in 2 weeks or not. And once that's funded, basically, it's that fee plus the one-time fee for the PA. If you add those two together, that is a really cheap way to buy $5,000 to trade with. That's what we're doing, and you have to understand all that. Again, I'm going to explain all that. I'm just introducing that what you will be seeing, whether you're seeing me in live money or whether you're seeing me copying. I will always explain that. We will always be transparent about that. And so if you have any questions or comments, be sure to reach out to me or JVC. Okay, downtime. This is an important one for this session because we're doing some classes. If you look at the schedule, we're doing some classes in the middle of the night in the US, when the European and Asian sessions are going on. And I may have a session going for 2 hours and there's nothing going on. I'm not just going to entertain you and talk and, sing songs. I'm going to leave the session running, but I may come and go. If it's really dead, I may end it. If there's something interesting going on that I'm not going to trade, but it's educational, I might just start doing a class. So come to as many of the live sessions as you can. Please try to watch the recordings. If you can't come live, the recordings will be up as fast as we can humanly put them up. We have a little bit of a lag from Vimeo and from Zoom to process, but in general, they will be up within a few hours. Worst case, by the next day, unless there's some sort of problem at Zoom. So last thing about this, do not try to duplicate what I'm doing while class is going on your platform or whatnot. That's a total waste of time and you will miss 90% of what I say. The last session we're going to do, which is the third Saturday on the calendar, we're going to go through that stuff and I'm going to share all of my templates and I'll answer questions about platforms. Why do I use Jigsaw for what I do with it? Why do I use Sierra Chart for what I do with that? When do I use NinjaTrader? I'm going to cover all of that. We're just not going to do it today. Okay, it'll be at the end of the session so you guys can stay focused on learning. Okay, I'm going to pause here for just a second because the next thing I'm going to do is bring up my platforms and what it looks like on my trading screen and walk through that. So, all right, you should be seeing my screen sharing here in just a second. You are? Yep. Cool. All right. So now we're going to get to the meatier portion of our agenda for this morning. This is going to be my tools and what you're going to see. So the vast majority of the time when we're doing live sessions, you will be looking at this screen. Now, clearly, there's no data on any of these domes right now, and I will explain what they all are when the market's running again, and I'll do it pretty much every session. But basically on the right here, right to left, this is going to be RTY, this is going to be YM, this is going to be ES. In other words, the three indexes besides NQ, which is right here, and ES and NQ are going to have liquidity maps running in these black spaces. And this is Jigsaw, this platform. And again, I'm going to talk a lot about what it shows when we have data. So the first session when you will see this with live data will be tomorrow's reopening session, which is when the market reopens. We start 15 minutes before that, 2:45 my time in California, 5:45 Eastern time. That's on the schedule. And then I will elaborate on the Jigsaw tools because I can't do that without data running. There's no effective replay type option that makes any sense. Okay, so that's what all of this is. And for now, what I'm going to do is just kind of get that out of the way because we'll come back to that. So I'm trying to keep this as simple as I can. You're also going to see these two little mini windows. Those are Thinkorswim windows that I'm looking at the tick of the broad market. And I'll explain what that is again when we're in some live sessions. But basically, the futures are a derivative of the equity markets. That's what our pricing is based on, but we are not the equity markets. There are opportunities to scalp by keeping an eye on what's going on in the equities. The best way I have found to do that is to watch the internals in the equities in two places. One, the broad market tick. Second, the NASDAQ 100 tick, because the NQ is the NASDAQ 100. I also watch the advanced decline of those two, but I don't watch it on this screen. It's on another monitor, and that's basically all of the issues going up minus all of the issues going down since the previous session, whereas the tick or the tick ND is what's going up and what's going down right now. And again, I can't explain this well unless the equities are trading. So our first session on Monday, I will show you this and I'll talk extensively about how this is useful and how it isn't. But I can't do that today and I can't really show you detail about it, just like the domes. Okay, there are no domes, JC, right now. I just minimized them. Are you not seeing the screen at all? JVC, can you help him out?
Yeah, it's just they were minimized. Yeah.
Yeah, that I put them away because there's no data on them, and we're not using them. I'm not talking to them, JC. That's why they're not there right now. I just minimized it. We're talking about this over here on the left. Okay. So anyway, this little chart again, it will only give me data when the market's open, and it's not. The next two things we're going to look at are really, really important to this entire methodology. So you're going to see this a lot. And there's two different versions of this. I actually watched this for all four indexes on my other screen. I have other monitors that I'm using too, but there's very little that you need to know that's on them. And when there is something, I'll drag it over and show you like I just did. But this particular view is something we're going to look at a lot. So I want to explain what you're seeing here. But again, I'm not going to go into a lot of detail until we're seeing it live. But it's important to just understand conceptually what this is. This is a chart of 5-second bars. So the interval is 5 seconds. The little numbers you're seeing above and below the bars are a wave volume indicator, because one of the things I look at is the amount of volume on the swings up versus the swings back. This is a Wyckofian technique. If you're familiar with Richard Wyckoff, also known as Rollo tape, goes back to the turn of last century, the 1900s. Again, I will talk about this a lot more once we're seeing data, but that's what these little numbers are. They get bright green when we make higher highs. They get bright red when we make lower lows, and they're pink for a low that's not a lower low, and they're dull green for a high that's not a higher high. That's all that is. It's a way of seeing the energy of the momentum and the aggression. Like right here, you can see this was right after midnight my time. And excuse me, that was noon. That was noon on Friday. So, going into the closing hour, and some buy-side action came in, and you can see we kept making higher highs on much more aggressive volume on the moves up. 3K up, 1K back. That's the kind of thing you're looking for. 2K up, 799 back. It's the nature of the ebb and flow. And what you can see here is there's more energy to the upside than the downside right now. Okay, that's all we need to see about that. Again, there will be much more detail. Now, these horizontal lines you see over here on the right side, those are linear regression channels. Again, I'm going to talk about this live a lot more, and we'll talk about the use of these and the details around them next Saturday, but we're going to see a lot of examples this week. What these are is very simple. But it can be overcomplicated, and this is a big one for the tabula rasa thing. You really need to not look at this as any more than what it is. These are not trend lines. They are not a channel. Price will go higher or lower than these lines. So they're not the highs and the lows. They are linear regression. Linear regression in math, if you convert it to English, means take all of the data between the two lines and plot the best fit of the data. That's what a regression does. A regression in English is best fit. So what I do is I use 4 different intervals of bars, and I do regression on them so that I can understand the very, very short-term range and how it might be changing. So you're going to hear this over and over again, but this type of scalping, there's 3 things we're concerned with, and this is posted in the pit. Number 1, which way are we going? Not trend. Which direction are we moving right now? Often that's counter trend to any overall trend in the market. Which way are we going right now? So if you looked at this, we're going up right now. Even though this was moving up here and it pulled back and didn't make a lower low below that, here we were going down. This was not a pullback of a trend up. Going up, going down. Which way are we going? That's what you have to focus on. Number 2, how much momentum are we going that way with? What's the energy of that move in that direction? And last, and often most important, how is it changing? When we get to an inflection point, what happens? Like here, we went up really strongly and then we just stopped. And this display on the bottom is bar by bar, the bid versus the ask volume. If it's kind of pink, that's volume trading on the bid, which means people were selling into the bid and it was either getting absorbed or not. And in this case, it wasn't, because we went down as they were selling into it. The blue ones are trading into the ask. And obviously, if we trade into the ask and we start going up, sellers are able to lift the ask, and you'll see more and more volume on the ask side of the market. Again, we're going to talk about this in a lot of detail. If those terms don't make sense to you, the courses that we offer on the website that we said were not a prerequisite, but were suggested. I strongly encourage you to do that. You need to understand the difference between trading on the bid and the ask and what that means. I will repeat it over and over again for the next 2 weeks. I will explain it, but that's not what I'm teaching. What I'm teaching is how to use that. If you don't understand what that is, then you need to go review that, okay? We'll come back to that one. So basically, these are regressions of 4 different time frames. The first one is 2 minutes. The second one is about 5 minutes. These aren't exact. And again, I'll explain what the settings and all that are later in the end of the session, the end of the 2 weeks. I'm going to tell you how these work and how to use them. Then I'll tell you how to put them on your computer if you want to. Okay, there's nothing proprietary. I'm not going to sell you anything. Almost every major platform on the planet has this built into it. None of this stuff is proprietary code. We're not, that's, I see that all the time. People, come to my webinar and learn how to use my, secret AlgoBox 9 billion nonsense. And, that's all nonsense. You don't need any proprietary software. All you need to do is learn how to read the bid and the ask. That's it. There's good tools for that, though. And this is one of them. This helps you understand dynamic ranges. The term dynamic ranges is covered in the 3 videos that are prerequisites. So please watch that. And then we will talk a lot more about how these work and how they interact. This is not something where you sell the high and buy the low, although sometimes you do that. But what this is doing is very simple. In English, it's giving us a statistical evaluation of the current range. That's all it's doing. Because good scalping is about understanding where we are, and if we leave that area, what could happen. So if we're in a tight range and we suddenly have more buyers or sellers than the market has experienced up to this moment, jump in, the range is going to change. And those are really big scalping opportunities. When the ranges are changing, or when there's like the edge of the market, the edge of a session, which we call a ledge. Again, all of these things, we'll have plenty of time to explain them to you. Just a quick overview, and we're talking about the tools. So anyway, you're going to see this one. You're going to see the same thing for NQ here, the domes that I showed you. There's a couple of other things that I will bring up now and then. One of them will be like this. This is a Sierra chart footprint of the 30-minute rotations, in other words, market profile. This does have emoji software on it. I'm going to turn it on and off so you see what it is and what you're just looking for, because I don't want you to have to buy that software just to understand this. On the other hand, it might be useful to you, so you'll be able to watch it. Again, full transparency, Emoji Software is Lee's company. Lee is my co-founder and partner in TRG, but nothing is required here. So if I hide that, you just won't see any of those little indicators, and they're just tools that are useful to help you see things quickly. I'm not going to be concerned with whether you have the tool or not. You don't need to have it. And again, in most sessions, I will turn off the tools like that, and I will just show you the price action on a standard Sierra chart footprint. Okay. And the purpose of this, I don't scalp off of this. I don't trade off of footprints, but I do use them for context. They give me a sense of how far has the market gone? Has the market gone too far? Is there absorption at this end of the range? Is there exhaustion? And that's one of the things you need to learn how to read. Where are high volume nodes? Where is the session relative to the overnight session? In this case, this was the overnight, and then this was regular trading hours. So it traded very strongly off of that. And those are things that create scalping opportunities if you know where to look. And so that's the purpose of these. But I don't spend a lot of time staring at footprint charts. Thanks to Lee, I'm good at reading them, but it's not a major piece of my approach. Okay, but again, I'll show you that live and I'll explain it live. There's 2 little windows here that are just really important concepts to what we do. But hang on a second, there we go. But again, when it's real time, I'll explain how I use them. One of them, I just look at the change from the previous day and whether we're well correlated or not, session to session. I'm also looking at the short-term correlation, second by second, on my domes. That will be right here when there's data. There'll be, so for example, if I'm seeing movement in RTY, I can see if NQ is going with that for the moment, for the instantaneous correlation. But over here, I can see, well, are we correlated on the session or not? And so that's the use of that. And then on this one, this is a Sierra chart quote board. I've just got the daily range for Globex for the 24-hour range. Again, dynamic ranges, I'll explain that, but that's why that's there. Okay, there's a couple of other things that I look at. Again, once the market's open, they'll make more sense. I look at a heat map of the indexes to see what's up and down. You can often game that, particularly with something like the YM, the Dow Jones, because there's only 30 components. Sometimes we'll have a situation like we did about a month ago where Goldman Sachs reported bad earnings. This is Goldman right here. And they were way down, but everything else was up. And so all you had to do to have a nice little scalping game going with the YM, with this index, was to watch Goldman. When Goldman started to recover from their bad earnings report, get long the YM. It was a great trade. And so there's information here under the covers that's useful to your scalping execution. And that's why we watch that. This is running in Thinkorswim. Again, I'll share all this stuff. Almost any platform can do, stuff like that and the internals, as I already showed you. Okay, the next thing that I look at, or another tool, a piece of the tool, is real simple. I try to get a sense of where are we relative to recent ranges. Everything for my scalping approach is about the short-term price action and ranges, whether the range is the year or it's the Globex or it's whatever. And on this particular view, what I do is I look at the last 2 weeks. And what I'm looking at is each one of these is the session, the regular trading hours session, and then the overnight is the part between it. What I'm doing is I'm plotting the blue lines are the initial balance, market profile initial balance, in other words, the opening hour. And these lines are standard deviations of the VWAP, in other words, of the volume-weighted average. I'm saying this answers a simple question. Where is an extreme? When we get to extremes like this here on the second standard deviation of the VWAP, in other words, we're getting away from where most of the volume is, and that's when markets tend to get quieter because people, the aggressive buyers are not going to be as aggressive because we're getting too far away from their perception of value. And the sellers have been, patiently waiting to sell into this, and they will, and you'll see us move right back into the range. So this is useful for measuring extremes. That's what we're doing here. You'll also see me do this on a daily level, looking at just the intraday view, but I like to zoom out and look at it this way to get a sense of, where are we in terms of yesterday? Because that's often, where the first reactions will be. If you look at this last week here, every time we traded down to the low, it got bought. And then when it finally didn't, we had a great short. It just got crushed when it broke down below that low that, it got bought here, it got bought here, it got bought there, it got bought there, it got bought there, but it didn't get anywhere. And then it came down here and look at how the volume picked up. So these bars are wider when there's more volume. It's called an equivolume bar. And that's what happened right here. You can see the volume is increasing on the downside, and we're going to an extreme and we're riding that extreme down. So that's an example where you don't fade like you do here, but you join that momentum. So I'm going to show you how to distinguish between those two things, and that's the tool that I use for that. The volume-weighted average price and standard deviations or extremes of that. And again, I'll explain the math of that in a lot more detail, but basically, if you have a standard bell-shaped distribution of prices, like we get almost every day, if you are one standard deviation either direction, you're getting about 66% of the data. So in other words, that's the middle, the value. But the further away you get, it gets really, really higher odds that it's running out of gas. For example, at SD2, you're at 99%, and if you go to like SD4, it's at 99.999. That doesn't mean we won't go further. It just means the odds are getting really, really high that we won't. And remember, we're thinking in bets. We're trading odds. This is not a game about being right. It's a game about using the odds to your advantage to take money out of the market. I have 3 rules in my scalping. They're very simple. Rule number 1, good trades tend to work right away. Number 2, always take profits. I will protect a trade with a protective stop as fast as I can get it on. I don't use R to R or any of that conventional wisdom nonsense. You take profits that the market gives you. You don't take the risk of it going back. You don't trade pullbacks when you're scalping. You take what you get and you get back out. So rule number 1, good trades work right away. Rule number 2, always take profits. And rule number 3, don't lose money. The only thing you can do wrong when you have a good scalping edge is have big losers. The way you have big losers is by being right, being stubborn, and that's something you just cannot do. You have to know where you're wrong and admit it instantly. Likewise, you're going to see a technique I call swarming here that's really effective for managing extremes. And when I'm trading that, it's going to look like I'm being really wrong. And again, this is why the tabula rasa thing is really important. But then you're going to see that despite the fact that it looks like I'm wrong, it's working. And because I'm playing the statistics. It's like if any of you play poker, I'm a semi-professional poker player, and a lot of what I do is based on the mentality of poker. If I have a really good hand, I'm going to play aggressively. So if it's in a really good spot, if the market's really extreme, I'll play aggressively. And that seems counterintuitive. It seems like, well, the market's really extreme, I should be careful here. No, you should be aggressive, because if you're wrong, it's really obvious. So that's a perfect place to be aggressive. And this is something that's going to take a little time. If you haven't seen it, if you're not a TRG member, they've seen it a lot. So bear with us. I will show you many, many examples over the next few weeks, and I will elaborate in much more detail about these tools. I am just trying to give you a broad strokes, what are we going to do and what's it going to look like? Okay. Let me think, did I miss anything big here? I don't think I did. I did all my platforms. We talked about that. Sorry, I'm just double checking myself here. I think I've covered everything from that piece. So let me put this slide back up, and I'll talk to a little more of the detail here, but I'm going to minimize that again just so we're not overwhelmed with stuff on my screen. Okay. So that was a really brief overview of my trading station. POV means point of view. What am I seeing when I'm working? So you're going to be like sitting on my shoulder watching me, not watching a video of what I look like. We don't do webcams. We say, you want to learn to trade? I'm going to show you my trading screen. And the tools, that's the best introduction I can give you of the tools without the market being open. But again, I have to emphasize this. Once we are open and we have live data, and let's get the calendar back up again here. Once we've done that, or once we're there, please, really try to understand the tools when you're seeing them working. And then again, just to be clear, next Saturday, I will go through them specifically, and I will get to this because you'll have seen them by then, and I will get to this setup stuff. So how am I using a tool? What information is it giving me? What information is it not giving me? Which is an important distinction. Most of my tools are there to tell me when I'm making a mistake. The tools in this approach for order flow trading are not like indicators. It doesn't like turn red when you sell and turn green when you buy. It doesn't work like that. We are looking for specific sets of conditions in the traded volume. When those conditions occur, we know we have an edge. And then we trade that set of conditions in the following way. Number one, we assess the quality of that setup. And I use a poker example. Is that a pair of aces? Or is that a pair of tens? One's good, one isn't. My favorite hand in poker is a suited ace-king, even though it's technically not the best hand. It has the most outs. So I'll tell you, this setup's it's an ace-king. I mean, it's a good setup. Sometimes you'll see me take trades or describe setups. I'll say, this setup's here. It's not great. It's worth taking, but, it's a pair of tens. It's weak. It may or may not work, but I'm willing to risk a little money trying it. Okay, so the first question is, what's the quality of the setup? And then the second question I ask myself is, okay, given that, what risk model do I want to apply to it? How much leverage am I going to use? What accounts am I going to trade it in? Am I going to copy it? Because, if copying is a way of creating more leverage. But it's also risky because the catastrophic risk of copying. If I'm copying to 20 accounts and I make a catastrophic mistake, I blow up 20 accounts. And I've done that, so I know how that works. I find in some cases it's better to just stay in one account. Worst thing that can happen is catastrophic risk in one account. That's a lot better than 20. But there's times when I do want to trade aggressively in a lot of accounts because the setup warrants it and the risk management warrants it. So that's what we'll be talking about in specifics. Okay. I know it sounds like a fire hose and it's lots of stuff, but keep your mind open, take lots of notes, watch the recordings, you'll be fine. Tomorrow, the first thing we're going to do is live trading the Sunday reopen. This is a TRG event as well, and you'll see live data. I strongly encourage you to come to this session live, because it's normally my open office hours anyway. It's an anything goes kind of conversation on Sundays. We talk about venture capital, we talk about entrepreneurialism, we talk about trading, and we trade the reopen. And the reopen is a unique event because of a lot of things I'll tell you about when you come to that class. One of the things that will be really good, though, is it's a relatively quiet time to see my tools in action before we get going for the Monday session, which trading the open with these tools is crazy and fun, and you're going to see it happen live, and you're going to see how this stuff is used, and I'm going to reiterate and repeat things that I said today over and over and over. Don't worry. So between now and Monday, I really want you guys to all get dialed in. Make sure you've watched the videos. Make sure you've looked at that book, or at least understand the concepts. Make sure you know where everything's going to be in TRG, where the recordings are going to show up. And if you just get to that point, everything else will fall into place after Monday. So I'm going to stop here for just a second and ask for questions, comments, JVC, Lee, anybody. I'm not done yet here, but I want to just pause, and I've given you a lot of information. How can I help? How can I answer questions? What did I miss? Lee and JVC.
One thing I will add that is a Zoom detail, and this is because Waleed, yeah, exactly. So Waleed, you figured it out, but just to let everyone else know, Zoom, no worries, Waleed. This is a Zoom thing that isn't always obvious, and this happens routinely, even in TRG. People send me private messages they meant to send publicly. Zoom will, by default, reply you to the last person who wrote to you if someone wrote to you privately. So if I happened to message you about something like changing your name, for example, if I happen to send you a message, hey, could you please rename yourself? And you do, well, now you're set to reply to me. So the next reply you send by default is going to go to me, not to the group. So just always take a look at the little blue bubble above the message typing area to make sure that you're actually sending your message where you think. And of course, that can bite the opposite way too, where you think you're sending something privately. And it goes public. So, be mindful of that.
Yeah. One quick comment. So, Waleed, your question, you trade your setups only at the open and the close. No. Look at the schedule. I trade 24 hours a day. My setups occur all the time. I'm just talking about the open here and the close to start, but look at the schedule here. The overnight trading, we're doing a bunch of overnight sessions. We're trading the open, we're trading the close, we're trading the rookie roast, which is the middle of the day of regular trading hours. The rookie roast is after the first 2 hours and before the last 2 hours. It's when the floor used to go to lunch, and I'll explain more about that. Can I trade this? Okay. What am I not being clear about here? Yes, Alex, I trade 24 hours a day. My approach works all the time. Now, there's different criteria, different times of the day. You approach it differently. These are not setups in the sense that you're used to out in Furu Twitter land, where, when A crosses B, you do C. That's not what this is like. I will go over in detail what I'm looking for and how I do it. And if you want to look at that beforehand, it is already posted in the Scalpathon stream. There is a document called Elements of Doc's Trading the Scalping Decisions. This is how I make trading decisions. So let's talk about this for a second, because it goes to your question, Alex, and your question, Waleed. They are not specific setups. The setups occur by the blend of these 6 conditions. What time of the day is it? Because different times, the open is completely different than the Asian session or the European session or the close. They're all different, and you have to have different tactics. Number 2, so you have to know what time of the day is it. Number 2, which way are we going right now, right fracking now? Because as a scalper, all you have to do is get this right, and then it's all execution. If we're going up, you either fade it when it stops going up, or you join it and you go up with it. And you have to make those decisions based on something. These are the criteria. Sweeps are the enemy of traders. of scalpers particularly, but all traders. A sweep is when a large trader puts on a big trade and it sweeps the order book multiple levels. It can take you out of a profitable trade really quickly. And if the environment is sweepy, you need to adjust your tactics. That's why it's critical for us. Liquidity. Where is the nearest liquidity? In other words, where are the large passive players? When we trade to them, what are they doing? Are there large bids or offers? Are they trading or are they moving out of the way? Or are both happening? They're trading and then we continue going. Maybe it's an iceberg. Maybe we reverse. Whatever. Excuse me. All right, the hiccups. So that's liquidity. Range. This is the essence of scalping. The Globex range, the daily range session, the Globex versus recent ranges. I just showed you that versus inflection points that we've traded off of recently. Another tool that I use that I didn't go into a lot of detail of, but this is a good place to show it to you. I use Sierra Chart's TPOs, a TPO chart like this. And I do that because I'm looking for where there's structural artifacts that might be interesting. Like these dotted purple lines, that's a poor week high. And it's still there because we haven't traded above it since. That's why you see this dotted line. I also look at the initial balances, and I'm looking for single prints on here. Again, these are all market profile concepts. I'll talk about them when we're trading during the week. This isn't what I trade off of, but it's contextual for that. So what this does is it answers the question for me over here on my criteria on where liquidity was and what the recent range looked like. And then where was their high volume, low volume, where were there single prints that we traded through quickly, where were there zero prints, where there was aggression. I look at those things for context, and I will show you all of that. But there's not like, when this, and this happens, it's going to turn red, and that means short. It doesn't work like this. You have to learn to just read the information the market's giving you. You don't need any tools but the traded volume to do it. And there's a couple of ways to represent the traded volume, and that's what you're seeing on my platform. See, there's really no difference between this information here and this information here. It's just being presented in a different way. This is showing it in 5-second intervals with volume on the swings. This is showing it tick by tick with volume on the bid versus the ask, which is giving us a sense of where passive players are and where there's aggression and where traders are agreeing on value. And those give us scalpable locations. It's all the same stuff. You don't need anything else except to learn how to read that. Okay? So let's see, let me put my chat back up. So are you following me, Alex, Waleed, everybody that asked those questions? You guys, is that making sense now? You know what I'm talking about here, at least as much as it can this moment? Okay, good. So next Saturday, once you've seen this stuff, then I'll say, okay, here's a setup, guys. When we have a ledge break is a really simple condition that occurs when the market, let's say this is my dome and this is the volume profile, and it looks like that. And, a kind of conventional volume profile. And let's say the VWAP is right there. And let's say, we're trading up here somewhere, okay, near the high. This is called a ledge because we haven't been up here yet on this session. And it's a very specific scalping setup to trade the break this way of the ledge and then the fade back to the range when it runs out of gas up there. That's a setup that I will show you next Saturday. But understanding how to do that, there's no tool that does that. You're just watching this information over here or the information on that footprint or the information on the domes to tell you where to play that and how to execute against it. Do I have a specific profit target per trade? No, and that's daft to do so. Sometimes I'll trade micros. I'll trade a minimum of 5 micros at a time. All I want to do is get a trade profitable and protect the profit. If it's going to be a runner and the market's going to take off, I'll stay with it as long as it's profitable. If it gives me 4 ticks and then I see it running out of gas, I'm flat. I don't use R to R, risk to reward. That's nonsense. That is a metric to look backwards. If you're going to trade the futures market, you look at where are we right now, and can I get an advantageous entry into that to scalp? Because remember, as a scalper, your mission is to get into the market, grab money, and get back out. Trying to go for targets or trying to use fixed stops is complete lunacy, and it will work against you. And I will show you why. This is about supply and demand and reading extremes. And the exact place that you would put your protective stop is exactly where you should be scaling that trade exponentially, not letting it stop you out. If you've read the setup properly. If you're trying to buy a low that's not holding, you're going to scale infinitely into a wrong position. But if you're buying a low that just suddenly took it out and ran stops and now is reversing, and the order flow and the bid-ask volume is showing that energy, there is an instantaneous opportunity with virtually no risk to go long there, not to go short. And that's what you have to learn how to do. And there's no R to R. In fact, if you were to do R to R on most scalping setups, it's negative, because you're at a spot where you can lose a lot of money if you're wrong, but the odds are overwhelmingly high that you're not wrong. So the whole notion of R to R makes no sense whatsoever, and we will talk about this. You take what the market gives you. And I don't trail any fixed way, Waleed. I put a protective stop in between the current trade and my entry as fast as humanly possible. Sometimes that means I get stopped out instantly for 3 or 4 ticks. Sometimes it means I protect 3 or 4 ticks and I get 300 ticks. You never know. But what you cannot let happen, is you cannot say, well, I'm going to give this trade some room. That means you don't know what you're doing if you're giving a trade room. Good trades work right away. If it's not working, you're wrong. Get out of the way. You don't let your trade have time to work when you're scalping. Scalping is an efficient process of taking money out of the market, whatever the market gives you at that moment. You don't plan it in advance. The market doesn't care what your plans are. It gives you whatever it's willing to give you in that moment. For a wide catastrophic stop used by pro traders, what account percentage? I don't do it that way, Alex. What I do is I have a catastrophic stop running in our trader, and it's ridiculously small. Because I don't make mistakes with losers, I keep it really tight. I might have a catastrophic stop if I'm scalping micros that's $150. And if it gets hit, it forces me to go back and reassess and either make it bigger or to call it a day. And that almost never happens because I don't take that much risk, but I take the risk appropriate for the size of account. If I'm in a quote unquote 150K account and I'm trading blocks of 5 micros, catastrophe is $5,000 loss. That would have to go so far against me that doesn't make any sense. So what I do instead is I look at it on a trade-by-trade basis. What would a really bad trade be in that situation where I had $5,000 of drawdown? A bad trade might be a loser of $500, something like that. So, in that amount of risk, instead of using a circuit breaker of $100, I might use a circuit breaker of $500. But again, this is on the schedule. We will talk about this in detail. We won't do it today, but I'm happy to, just entertain the questions as they're coming up. But if you take a look at the schedule, you're going to see that, let me get rid of my drawings here. Okay, you're going to see that risk management is a very specific topic that we are going to talk about. And most of the discussion of that will be next Saturday as well. That's where I'll answer a lot of those questions. But these are really good questions. Keep them coming. For this point in our journey, yes. Okay, let me put my little slide thing back up, even though there's not much left on it. We're right at an hour and a half here, and I can do more and go into more intro stuff, or we can, if you have questions, I can answer those. I'm kind of trying to decide at this moment if it's worth spending more time on, some of the tools and whatnot, or if we're better taking an hour and a half, letting you guys get yourself organized and doing that at the Sunday session tomorrow or one of our other sessions during the week if necessary. Resulting, yes, that is a huge concept. So Ted's asking, when reading Thinking in Bets, are there any particular topics you'd like to highlight? Yes, resulting. is key. Thank you, JVC. Absolutely. Resulting is the notion that I can judge the quality of my performance by the results. And that's not true. You can't judge how good a trader you are by your profits because profits vary. The market isn't consistent. You can judge the quality of your process by how well you followed your process, and the results will come. Process leads to profit. It's not the other way around. You don't look at your profit and say, what did I do right there? That's backwards. You develop a process that's profitable, and then you execute that process over and over again with skill, and you practice it and you get good at that process. So you don't want to be a resulter. A resulter, and this we'll see, this is going to happen during Scalpathon. There'll be somebody that will tell me when I'm scalping, let's say we're going up and, it's not necessarily a trend day. We break the ledge to the upside and I scalp it short a bunch of times, which I will do, and you'll see that. There'll be some guy in Scalpathon that will say to me, well, I've just been long the whole time trading the trend and, I'm up $500, so I must be right because you're only up $300 with your scalps going the other way. That's resulting. That's meaningless. We're looking at a technique, and the individual profit from any one execution of a technique is meaningless. It's what is that technique capable of doing over time? And that's why I pointed your attention to the anything goes stream and my scalping micros this AM. There's literally thousands of examples here. This isn't resulting. This is a process that works that I keep practicing over and over again. And so that's a very important distinction, and that's in that book. Another piece of that equation is thinking in bets is separating the emotional or ethical question in your decision and just looking at the decision and saying, what are the odds here? And that's the key point of thinking in bets. Just learning to look at something, and instead of looking at all the factors we can look at it, just say, well, what are the odds something's going to happen, and what would happen if that does happen? So, for example, I just drove myself from Cambria, California to Tacoma, Washington State a couple of months ago. And I did it during a very big snowstorm. And there was a couple of places where any given decision could have been life or death because of the roads getting closed and people getting snowed in. And, I'm in a moving truck towing my car and all, not a good environment. And the whole trip, I just kept thinking in bets. Okay, yeah, I might be able to get through that path, but if I get stuck up there, I'm dead. I'll freeze to death. I don't have enough water, food, energy, heat, whatever, So thinking in bets applies to life too, but it's a critical way to think in trading because you have an edge. The things I'm going to show you have an edge. So if you can look at every time you get a setup and you say, well, what's my edge is here. What is it right now? What's the bet here? Is this a pair of aces? This is a really good hand. I'm going to play it aggressively. Is this a really good setup? I'm going to play it aggressively. If it's not, I may not play it at all, or I might play it in sim to practice, or I might play it with a lot smaller size. You're going to see me trading micro NQ, MNQ, and you're going to see me trading NQ at the same time for different reasons because one is a lot riskier than the other. It's 10 times more leverage. When I'm trading micros, I have a lot more flexibility to how fast I scale. It's not like 1, 2, 3. I can go 1.1, 1.2, 1.3. That's very flexible and that's very powerful in an instrument like NQ that can move, hundreds of points in a day. That can be the difference between a profitable and an unprofitable trade right there. Just managing that. And that's something I've developed some good techniques for, and they're really successful for me and for other people that I've taught them to. And so that's why we're here, so you can see them and learn. So let's see. Okay, Sebastian, I'm asking Russian. Yes, you can. Okay, people always ask me this. And so what you're asking me is how I picked the regression here. Okay. First of all, if you watch the 3 videos in the library, risk 1, 2, and 3, if you haven't watched them recently, watch them again because I go through that in a lot of detail. I actually used an optimization model that a friend of mine runs his hedge fund trading with. And he lets me run, I don't trade his hedge fund, but he lets me use his tool to help optimize my tools. And that's how I arrived at this. What we're doing here is looking at a very, very fast interval, which is about 2 minutes, not exactly. And then we're looking at about 5 minutes, which is this one, about a half an hour, and about an hour. And the regression is showing 2 standard deviations in either direction. But again, I don't want to get into the tools or what the settings are today. That's not why we're here. We're here to talk about how you use the tools. The last Saturday of class, I will go into how to set these up and my templates and all that. That's on the schedule, but I don't want you guys messing around with this stuff now. I want you focused on watching how I use the tools. And 2 weeks from now, you can focus on setting them up and what all the settings are. I'm just trying to bring up the schedule again to show you that where that is. So there it is. Okay, so if you look at the last Saturday, Q&A, next steps, wrap up, that's where I will go through details about how to set this up. And if you have any questions, I'll answer them. I'm not going to do, platform support, but I'll walk people through settings and whatnot. I don't want to do it now. I don't want you messing with it now. I want you watching how I'm doing it and how I'm using it for the next 2 weeks, please. Okay. Hopefully that makes sense, Sebastian. Other questions, comments? This is good stuff. Keep it coming. Okay, I don't see any other ones. Cool. All right. So
you got asked
here we go.
About do you do all your execution on the dome?
Yes. Okay. When you watch me live scale, yes, I trade exclusively on the domes, but on the domes, I am not necessarily trading. The beauty of Jigsaw is it's multi-platform and multi-account and multi-broker at the same time. So I will execute all of my trades on Jigsaw, but some of them are executing in Ninja. Some of them are executing directly through Rhythmic. And I also execute some through Apex, my Sierra chart account, or not Apex, help me, AMP, through my AMP Sierra chart account. So, but every trade I do will be on the domes, yes. And so that's definitely what you want to focus on. But what I'm going to do while I'm doing it is I'm going to show the other tools and what I'm doing with that tool. So for example, we'll often be, over here doing MNQ scalp or an NQ scalp, but then I'll explain why I'm doing it based on the range over here, or based on the energy on the bid or the ask, or based on the wave volume back and forth, or based on some structural artifact that we see there. So I'll always be showing you what I'm doing, but execution will always be on the domes. Yes, good question. Trading should not impact your heart rate significantly. That's pretty funny. Yeah, that's true. I actually have a heart monitor that I wear when I trade, Waleed. My resting heart rate is 55 when I'm trading. It's typically 71. I don't get excited. Trading, good scalping is very boring. It's just in and out, wash, rinse, repeat. I don't get emotional because it's old school. I know I can make money doing it. So it's not like if I have a big winner, I get really excited. It's just like, oh, well, that's a winner, you have to develop that. It has to be monopoly money for you. Really, really have to. And I strongly encourage you to wear a heart rate monitor when you trade. If you're finding, your resting heart rate is, 50, 60, 70, and you're trading and it's 100, there's something wrong. You're doing something wrong. You're drinking too much coffee. You're getting too excited. You need to learn to meditate. You need to practice your breathing. There's a whole lot of things that need to happen. And I will talk a lot about this while we're doing the live sessions, because you'll hear me doing it. You'll see me do it. I'll say, okay, I'm going to take a break for 2 minutes and go meditate. I do that a lot. I'm going to go reheat my coffee. I'm going to go run the stairs. You'll hear me say that. I always live in 2-story houses for some reason. And a quick way to, burn up some nervous energy is just go run up the stairs and run back down. And my trading room is downstairs. And so, you have to develop tools like that. I have dumbbells in my office. I do curls and shoulder presses and pull-ups and crunches. You have to keep your body and your emotions out of the decision process. Critical. So I'm glad you brought that up, Waleed. That's a good point. Yeah, breath work and meditation before trading. Well, you may need to be doing it during trading too. Let's see, exactly. I'm sweating out my arm. Yeah, if your hands are sweaty, that can be a sign too, but sometimes that happens anyway. Let's see, do I recommend Jigsaw for my technique? Idris, yes. You can do most of what I do in any trading platform, but you're going to see me using Jigsaw And it's got a couple of things that are just sort of unique to it. You can get close in other platforms depending on your style. It may or may not matter. So, and I will, talk to that. And we do have an affiliate relationship with Jigsaw, so we'll give you a link if you're interested in buying Jigsaw. But again, I encourage you not to do any of that until you've seen this going for a week or two. Ask me the same thing again a week from now, and you'll have seen live examples, and you'll understand the difference between trading in Jigsaw and trading in another platform. It's a really good tool for execution, and in scalping, execution is king. It's critical. But having said that, Lee doesn't use Jigsaw. He uses Sierra exclusively, and so does JVC, and so do a lot of our other traders in TRG. They don't use Jigsaw, and they do just fine. They just don't have quite the execution tools that I do, but they may not need them. So good question, really good question. What other questions do we have? And again, I promise you guys, I'm going to be nauseatingly repetitive on all this stuff through the live sessions. As you can probably tell just listening to me, I'm not the kind of guy that keeps stuff to myself. I'll be talking nonstop in every session. You won't get bored, I promise you. Nobody has ever, I get complaints, but Jeff on board is not one of them. Jeff, you talk too fast? Yes, I get that one. What is the platform name? All right, I'm using multiple platforms, Waleed. I'm using NinjaTrader 8, which is this. I am using Sierra Chart, which is this. I am using Thinkorswim, which is this. And again, you don't need to be using all these separately. And I'm using Jigsaw, which are these domes. When you see the live sessions, you'll see how I'm using them. You could, for example, just use Sierra Chart for what I do with nothing else, but you have to set it up differently to be able to do that. And these are all personal decisions you guys all have to make, and I don't want to have too many of you making them now. Again, these are conversations for 2 weeks from now when you've seen how the tools work and which platforms do what, and then it will make more sense. But the platforms are Jigsaw, NinjaTrader 8, Sierra Chart, and Thinkorswim. That's fine if you only use NT. The dome in NinjaTrader leaves a great deal to be desired. Can you do this kind of trading with it? Yes, but you're going to need some other tools to make it work. You'll at least need a decent footprint. Lee provides one for free called Free Print from Emoji, Free Print for NinjaTrader. That will give you some of what you need. You'll be able to see the traded volume on that. So if you don't at least have some sort of footprint running on your Ninja, you will need it. But again, I don't want you watching your stuff when you're in class. I want you watching my stuff and learning a technique. I am here to teach you a technique. It's like we're on a sailboat and I'm teaching you how to turn the sailboat. You do this by letting go of this sheet and pushing the rudder this way and the boat comes about, all right? If you've ever sailed, you've done that, all right? You can't be over in your sailboat learning how to come about in my sailboat at the same time. You've got to stay in my boat with me. Then you can go off and learn how to do it yourself. Okay, cool. That's a really important point. We get that, and everybody, every time we do a live workshop like this comes up. Everybody wants to trade right along with me, and they want to get their stuff set up to look like mine. And literally, that's a complete waste of time right now. You need to focus on what I'm doing and why it works and how it works, and then go back to your platform and say, okay, how should I implement this given what tools I'm using? Or do I, in Idris' case, his question, do I want to get Jigsaw? Is that worth the $500? Again, these are all things we'll talk about once you understand, seeing them in use. Okay, you want the Lambos? Yes, exactly. That's what everybody wants. You know what? The number one rule to learn about the trading world is trading is not get rich quick. By the way, I drive a 20-year-old Mercedes. So I'm not a Lambo guy. I think that's kind of nonsense, but whatever. This is get rich slow. This is not get rich quick. Get rich slow. Thank you, Waleed. That I got to tell you. See, this is the kind of feedback I was talking about. It's great, guys. I can tell, like, if Waleed was in the audience and I was looking at him, I could see that, hey, this is fun. This is going to be exciting. I want to learn this. That's the kind of feedback. Please continue to give me that. It feeds my energy and it makes me better, and it gives you a better experience. Trading is I'm going to qualify that. It's not the hardest way to make easy money. It's a very easy thing to do if you practice it. But It's not complex, in other words. It's not complicated. It's very easy, but it takes a lot of practice to do it well. And that's the mistake people make, is they think that once they understand it, oh, I can just go do it. And you don't realize the challenges you're up against as a human being just with your fear and greed, for one start. We are our own worst enemy in trading. That's absolutely correct, Ted. Okay, so we're at an hour and 40 minutes now. And again, I can start new topics, but my sense is not to do that today. I think we've got a really good kind of blend of information and where we're at. And what do I think about trading bots? Another good question. It depends. Lee's software in its upcoming release will have a bot building tool for executing under conditions where a human has trouble executing quickly enough. I think those are wonderful tools. I use certain things like that myself sometimes, but you won't see any of that in this session. It's not necessary. There's also, algo bots that trade pretty aggressively in the markets. A lot of the funds run them. You see that mostly in ES. You don't see it as much in the other indexes. As far as, automating your trading, I think it's nonsense. You can't automate your trading process because it's condition critical. What you can do is you can turn bots on and off that help you execute under the current conditions. But what bots aren't good at is understanding what the conditions are. That's where they go wrong. And that, a trend following bot will trade you to death with small cuts, death by 1,000 cuts in a market that's not trending. And most of the time the market isn't trending, which is why trend tools are useless. And, it's really unusual for the market to trend. Most people don't understand that. In the futures market, any given 1,000 days, 100 days, 10 days, the market might trend 1 or 2 days out of 10 at the most. A futures market is a volatile two-way market. It rarely opens one direction and just goes that way all day or all session. So you have to learn the opposites. So you can automate. Again, you can automate execution. And, maybe at the end of the session, we'll ask Lee if he's willing to come in and show us a couple of emoji bot tools. This is an upcoming release of his software. I think that's really cool. For example, scalping a ledge break. It happens very fast. And sometimes I miss it. I'll use limit orders. I'll use market orders. Sometimes, most of the time, I can pull off a ledge break scalp pretty well. But there's times I'm not fast enough. And if I could teach a tool what I'm doing when we get to the ledge, flip that tool on, we get to the ledge, it executes my ledge break strategy, and boom, I turn the bot back off. If that bot was on when we were in a range, I'd get crushed because it wouldn't understand the conditions it was trying to execute against. So, they're useful for execution, in my view. I don't think automated trading will ever be real because the conditions change too much. I think there'll always be an opportunity to go in and profit as a human being with discretion. But, automating execution is definitely worth looking at. I bought some trading bed and lost over 60K. All right, well, then that. See, backtesting is also nonsense, Waleed. Backtesting is using a model to prove something by going back in the past, which is nonsense because there's thousands and thousands of variables in the market at any given second. So why should what happened in the past happen in the future? What evidence is there of that? And the answer is there isn't any. Backtesting is complete nonsense. The only thing you can accomplish with backtesting is you can prove a concept might work, and then you have to test it in real conditions. So, anything like that is, that there's so much of that garbage for sale out on the internet, and, it's all garbage. There's nothing that way that works. But people are endlessly searching for those things. And, and even after this class, people will continue searching for them, despite the fact that anybody who's accomplished in the market will tell you there's no such thing. Those tools just don't exist. It's not possible. If they were, then the guys that had them would just turn them on and leave them on and get rich. And, as much as you hear that happens, that doesn't happen in the real world. There's no such tool like that. There's plenty of people, and I'm connected to a whole bunch of hedge funds. You're going to hear about this on our Ides of Monday meeting, but every Monday I go to a telephone call with 17 people that run hedge funds or family funds or private equity funds, and we're all pretty well connected. And I guarantee you that if that existed, I'd be aware of it, and it doesn't. And we'll talk more about that. So what about the new AI chat GPT things? They can learn and adapt. Yes, they can, but that doesn't work in trading. Artificial intelligence can automate processes based on large amounts of data. And yes, it can adapt as the data changes. But you're trying to assign skills that, Sven, here's the problem. There's no coders in the world. There's no tool that understands trading well enough to create the code in ChatGPT. What it's going to do is go out and look at the existing knowledge base, and those things aren't out there because they don't exist there. They exist in individuals. Okay. So again, and this is a silly discussion to continue too far, but it's fun to take it to this point. Going forward, yes, the AI is going to get smarter and smarter, but that doesn't mean there won't be human ways to trade. There always will be because of the nature of the market, which is humans. If we get to the Skynet point where it's just the computers trading with the computers and we're gone, fine. But until that point, I don't think we need to worry about that. Let me just put it that way.
Well, and that would be too efficient for there to be any meaningful trade.
Exactly. So, if the market would be so efficient that there would be no reason to trade because you couldn't make any money.
Yep. I don't think it'll ever happen because of that alone. That one point alone.
Happen.
It can't.
Again, by definition.
Exactly.
Yeah, that's like saying, well, if you can go up and down at the same time. No, you can't.
Yep.
It might be really quickly back and forth, but you're only going up or down. You're not going up and down at the same time. It's not possible.
In fact, the AIs, in order to take advantage, they need the humans. They need the humans in there who are going to do the wrong things and make irrational decisions or not. So
they can make a logical one against it. Exactly. That's so true. And again, if you have a good understanding of statistics and math, this stuff makes a lot of sense. But, there's a lot of hype around artificial intelligence. And even for reasonably intelligent people, it's hard to understand exactly what it can and cannot do. And interesting. Okay, let's see. In space, I can go up and down at the same time. Okay, see, here we go. There's one in every audience. Let's see if everyone, exactly, Waleed. This is a zero-sum game. Every trade has a winner and a loser. It can't be any other way. We have a perfect market. The beauty of trading the futures market, there's many of them. There's tax advantages if you're in the USA. It's the most liquid and transparent market on the planet. But on top of that, it's a perfect auction. There's no real market makers in the futures. There's large active players and large passive players. They might refer to themselves as market makers, but everybody makes a market. When I put up a bid, I'm making a market for a 1 lot or a 5 lot or whatever. And so understand that this is a pure market with perfect information, or as close to that as exists in the real world. And then, so that's powerful. Let's see. Quantum man. Yeah. Okay. There. Exactly. When we have quantum logic trees, yes, you can be on and off.
Then we're in trouble.
Then we're in trouble. Yeah. But I don't think that a quantum computer could be any better at this. It would just already know all the results that could happen.
Yeah.
But
so two quantum computers trading against each other would still go nowhere.
Yeah, exactly. So one of them would still have to make a mistake, and it will happen. It's not possible that they both would be perfect, or the market literally will go away. There will always be perfect value. There will be a price that everybody automatically agrees on, and no one will challenge it. And boy, if I live that long, that'll be interesting to see if that ever happens. I don't think it will.
That'd be a long time, I think.
That's a long time away. I think even Ray Kurzweil would agree that that's not going to happen real soon. And he's the most prominent futurist I know. And by the way, he's a really interesting guy, Google fellow, and invented text to speech and a bunch of other things. And I've had the honor of being in the same room with him on a couple of occasions. And the guy is just on a different planet with the way his brain works. Really good book. The Singularity is Near, The Age of Intelligent Machines, Ray Kurzweil. Okay. Let's see. And if you don't know what a Google Fellow is, he's bigger than that even. But a Google Fellows are basically people that Google hires and pays to just think and do whatever you want. They just want you on their team. He's one of those. That's a pretty rare accomplishment. Okay. What other questions, comments? I think it's a good spot to start wrapping up, and we will get going bright and early tomorrow afternoon, my time, for the reopen. And then it's not on this calendar, but we will be posting in the pit. We have the Ides of Monday, IDES, like the Ides of March, the Ides of Monday. We do that every Monday at 5:30 my time, 8:30 Eastern. It's not a Scalpathon event, but we go over the hedge fund call, we go over the market, and we're open to the public, so we will put that link out for you, and everybody will be able to join that. And then we will have we'll have our Sunday reopen. Please come with your questions, and you'll be able to see everything live tomorrow, starting when the market reopens at 3 my time, 6 Eastern. And then we will have our first real live scalping session together. Will be this one, the Monday, May 1st, 10:30 Eastern, or 9:15 Eastern to 10:30, trading the open. We're going to do that Monday morning, and you'll get to see all this stuff in action, and I'll explain what I'm doing. I will explain my 3 opening setups that I trade. There's an opening 5-minute momentum trade. There's a 15-minute initial break, the 15-minute range, the opening period. We trade the break of that, and then we trade the initial balance. And along the way, we scalp momentum and we scalp ledge breaks. So that's what's coming up the next few days. One other thing I want to say before we wrap up. Thank you, by the way, for the feedback, Ted. I really appreciate that. Here's what I just want to put out there last. As I said, this is a very long, extensive schedule, and I'm going to add to it ad hoc sessions. Please put your questions in the pit or to JVC if you have them. Don't reach out to me directly. I'm going to be buried. I will answer questions in the pit, but don't send me private messages. I can't handle 40 people private messaging me every day and do this calendar. Please respect that. On top of that, also, I'm going to be doing some live sessions that aren't on the calendar. I will post alerts when those happen. If they happen, they will. Probably not for the first few days, though. And then the last thing I want you to just keep in mind, if you would, I am 63 years old. I'm a very fit and youthful 63-year-old, but I used to race professionally, semi-professionally in motocross, and I also did Class C sports car racing. I have broken many, many parts of my body many times because of that. I have had spinal surgeries many times. I have fused lower spine and so it's hard for me to do some things sometimes, and you may hear me a little bit, grumbling, and so please, just understand, I'm going to be at every session live unless something really major wrong, in which case we'll let you know. Every now and then something unplanned happens, the power goes out or the internet goes down, we'll keep you notified of that every way we can. Please stay tuned to the pit. That's where all information is disseminated, and subscribe to the alerts from the pit so you get emails when you'll know if something like that is going on. If there's an added live session we're going to do, you'll see an alert about it sent to you that way as well. Any way you want, you can set it up. And real quickly, I should show you how that works. I'm not going to go in detail, but if you take this alert stream, you can subscribe to you can set alerts based on your settings for that stream. So JVC has posted a bunch of information about how to do that, but I recommend doing that. But keep in mind, I'm going to do the best I can, and I may make some mistakes in front of you in my trading. I try not to, but I might. That's the fun of being live. You might see me with a big bad trade. I might show up one day and I didn't sleep and I feel like crap, and I'm just going to tell you what I'm seeing in the market and not trade it. The whole idea of this is to get in to get into my trading room with me for 2 weeks and just see what it's like. I trade around the clock. I leave my computers running all the time. If I walk by and I see a trade I like, I'll take it. And I set audio alerts. So if I'm not in this part of the house and something's going on, I'll get a text, I'll get an audio alert on the computer. So, it's a very interactive environment, and I encourage you to be really participative, but also understand that, I'm only human. I'm doing the best I can. JVC will be helpful to you for any administrative issues or logistics issues. And also you'll have occasional visits from our co-founder Lee at some of the live sessions, and he may do a little bit of stuff at the end for you guys as well. So that's kind of the broad strokes. That's pretty much where we're going to wrap up. Are there any other questions or comments? Your wife has RA. Yes. So you get it. You totally get it. Yes. I have, on top of everything else, I have rheumatoid arthritis, which the TRG people know, which can be brutally painful, and it can really drag your energy. So I have all the broken bones, and then my immune system is attacking my joints just for fun. Okay, thank you, everybody. I really appreciate that feedback. It makes my day. And one thing we'll do at the end of every session, I will say, does anyone have any burning desires? By that, I mean, is there something you absolutely have to ask before we're done? And I'll say that first, which gives you a chance to put it in the chat, your question. So at this moment, are there any burning desires, any final questions? Please start typing, and you can say, yes, I have one, and then I'll give you a minute to type it. Otherwise, after we've done burning desires for a minute or so, then we go ahead and wrap up. And we will review at the beginning of each session briefly what we did before, and then we'll be off and running. Please come to tomorrow's reopen, tomorrow afternoon my time, so you can see this stuff running. Come to the Ides of Monday. The link will be posted for that. And then our first real aggressive, fun live session Monday morning for Trading the Open. Thank you for all the feedback, guys. I really appreciate it. You made my day, and I mean that.
I'm going to throw something in there as well. Is I'm a big part of my role is to try to take extra load off of Jeff for something like this, so that he can just focus on delivering the material and so forth. So with regards to the private messages stuff that Jeff was just mentioning, if you're thinking you've got something that you want to send him, maybe send it to me first. That might be a good way to go, because number one, I might actually be able to answer it for you. I mean, I've been in just about every single TRG session for the last 3 years. I've only missed a handful here and there. So I may, in fact, know the answers to whatever you're wondering about. But also I'm a student just like the rest of you. So I have my own path. I've been through the ups and the downs and the trials and the tribulations, and I may be able to help with anything that's on your mind. And if there is something that is in fact a legit, valid Jeff question, then, I can either say, yeah, you know what, he's going to want to hear from you on that. Go ask him, or I may bring it up for you and get you the answer you're looking for. So feel free to message me anytime. I'm online most of the time, and I'm always paying attention to what's going on in the pit. So I am here for you.
Yes, we are very, very privileged and happy to have JVC. He's a wonderful community manager, and we don't pay him nearly enough for what he does. So
you couldn't,
but yeah, no, we couldn't. But he's getting good education too. So and again, yeah, I don't want I don't want to be distant and unreachable, but understand that we've had cases where everybody, when we did our first Scalpathon the first day, I got 50 private messages. It's like, come on, guys. Number one, even if the answer, everyone needs to hear the answer. So, to try to follow the framework we have established for you. Okay, I think that's a good spot to rest up, to wrap up. We have no burning desires. There's no other final questions. I think we will do it. So I will see you guys bright and late tomorrow afternoon. Again, it's a very casual reopen session. Join us. We'll get going, and then be ready. One of the things I told everybody in the weekly wrap up last week, we've had just one good trading week after another. I'm putting in some of the best weeks I've had in years in terms of, the P&L, which is the result, but I'm processing really well, or it wouldn't be happening. And so I just love these conditions. So I'm really excited about being able to do this. And once we get going, it's going to be a lot of fun. So, get your rest and take good notes, and, be prepared to be overwhelmed with pretty cool information, but be prepared to be overwhelmed.
Yes, all right. Indeed.
That's it. We're out of here then. I will see you guys tomorrow. Thank you, JVC.
Catch you tomorrow. Absolutely. See you there, guys. Bye.